The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. Now, Larry Pesavento.
Okay, looking good, Billy Ray, feeling good, Lewis. A lot of things happening out there in the world today, folks. December 7th, the old Pearl Harbor Day. Very day that will live in infamy, and I'm sure it always will, and it should never leave our thoughts for what happened on that day. Also, today happens to be Larry Joe Bird's birthday. He happens to be, I think he's about 60 now, if I'm not mistaken, pretty close. Anyway, it's really interesting because his birthday was always celebrated on July the 4th there in Terre Haute, Indiana. So they always had a big fish fry. I was able to attend several of those over the years and got to meet him and stuff. So, yeah, today was also a sad day. My father passed away here 35 years ago. More than that, 40 years ago on December the 7th. Also, okay, I posted a chart of the FTSE, as you can see here. This is very unusual, folks, because you can see the FTSE has been going up, and yet the British pound associated to that FTSE has been, going down, mainly because of this deal with the fishermen and Macron or whatever that stuff is that they do over there in the Forex market. But we looked at this. If you remember a week ago, we were in here watching this because this was the weekly chart here on the Brexit. We'll do the DAX in just a moment, but just bear with me here. You'll notice back in June 27th, 2016, that's when Brexit happened. We were sitting right at a 61% retracement there at 150. We went from 150 all the way down to 118, rallied up to the 78% level, came back down, made a new low at the ABCD level in March. That was a perfect ABCD from 2016, and we hit the 382 last week when we were watching this up here at the 135 level. And last night, I mean, we've had a big move here in this British pound here. You'll notice here what's happened since where we were on Friday, which we were talking about this on the air as it was going on, that you'll see that we had this huge break here because we came in Sunday night trading at about 134. The news was out that things were not going well, and yet the market, still didn't move much until about getting close to about midnight. New York time, and then the market broke badly. We got all the way down to we broke 3 full handles down from the high. So that tells us there's a possibility here that this is a pretty significant move in the British pound. Well, 3 handles is definitely a big move in the British pound. So we need to watch that really closely here. Okay, now let's get the DAX up because it's at a very, very critical level, just like our stocks are. If you read the 24/7 newsletter, you realize that we were talking about the possibility we're up against some pretty strong resistance levels. You can see here in the DAX chart quite easily. You can see the wedge that's been drawn in here over the last month. We went up and we matched the highs that we were in early September. That's when we had the big move down. And then we had the rally all the way back up. So it's just been nothing more than up and down, since that time, taking into effect some of the worst news that you could ever have in the market. But my 2 cents worth is, folks, is when they finally get these vaccines working and we're back to normal, it's going to be the exact opposite of what people think is going to happen. Everybody's saying that once this vaccine is in, the market's going to explode to the upside. And boy, you know what? It certainly could. My hat's off to them if they can do it. But I've read Bernard Baruch's book, My Own Story, which is his autobiography, several times, and it's really is David's putting in there, selling the news. I think it's going to. He says in that book, he said stocks many times do the exact opposite of what the news is telling it. And I agree with that. And this has been a time when you certainly have to be a believer. I mean, every day we've had bad news, unemployment, people shutting down. And so you got to be watching the patterns. And that's what I'm going to be, that's what I'm going to be doing. So we'll see. We did hit some major resistance up there, especially if you look at the Russell. Check your newsletter out. We were within about a hair's breadth. We might have hit it overnight. I'm not sure because we did open a little bit higher, but we were within about 20 points in the Russell of making that giant ABCD pattern that has been out there. So I think that's another one that is very important. Now I want to take a few minutes here to go over one of our listeners sent me an email, and then I chatted with him on the phone over the weekend. And I just want to give you a little heads up of what we're going to be talking about. He was a little concerned because he had a position on and in the euro, and the euro was working really well. He was up about $500, and then the market quickly reversed against him. He was short, and it quickly reversed against him. And instead of getting out of the position, what he did was he was short the futures on the large contract at the CME, and what he did was he bought. He actually had two of those, I believe. So he bought 20 of the minis of the futures, the micro contracts. So that basically, hedged his position. Now, this picture that you're looking at right here is right behind my desk here. It's a 4x4. It was done in 1976 by Elsie Darnielle, a very famous California painter. But she only painted vegetables and fruits. But she was very, 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 very well known and stuff. But her husband happened to be one of my accounts, and he used to come into my office occasionally, and he'd see these little Post-it things I would have there, little cards. This was long before Post-its, but it was little trading cards that I had up there that showed these different patterns. And so what he did was he took a picture when I wasn't there, and then there were Cougarans on the desk, which we sold Cougarans all the time, and then my proportional divider was there. She recognized it as a compass, but it was a proportional divider, and I had a little wooden ruler just like that. But you'll notice that these are the rules that I've always, looked at from all the writing. Most of it comes from Reminiscences of a Stock Operator by Edwin Lefevre, the story of Jesse Livermore. But I'll run through these. But before I do that, number 10 is never hedge a losing position. And the reason for that is once you do that, you are forced into a position where you have to make two decisions. And what this young man did was he did it right. He, if you're going to hedge it, you should have taken the hedge off at the same time. But what he did was the micro futures went up because it was, really moving to the upside. And so what he did was he took profits in the micro futures and then left himself exposed on the other side of the position on his large size contract. And guess what? It flipped around and bit him on the kabuki. So I told him, I said, look, if you get out of this now, you're going to save yourself a whole lot of heartache, because the story is, what was given to me by Oscar McClure and Dave Nelson and also Earl Hannity, whenever you have a spread on, you have a stick. You put your hand on the left side of the stick and a hand on the right side of the stick, and no matter how you try to get out of that spread, I said this the wrong way, and I better not go any farther than that because it contains the S word. Anyway, a spread is an S on both ends, and no matter how you let go of it, you still got S on your hand when you're done. So don't hedge a losing position. If you put a spread on, take the spread off. We'll be right back. 877-927-6648.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, Taz understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the Taz Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the Taz Profile Scanner under the Services tab. Sign up today. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Okay, folks, I posted a little factoid from our good friend Rich Anderson showing that the hedge funds have been as bullish as they've been in a very, very long time. Now, these are just factoids because, these are not things that we look at. We're just saying that these are the things that are happening in the market, so we need to pay attention to them. The other one that's interesting here is if we look at the number of insider selling is just really, it's really quite amazing here because we haven't seen anything like this in several years, but there's been a great deal of insider selling. We saw that in Pfizer, of course, with their vaccine coming out. So those are just a few of the things that the market is telling us, what's going on, with some of the underlying natures of the market, which if you're a technician, you're not following those. You're looking at the bar charts. That's really what you're trying to do. But those are the things that are in there, maybe stirring up the pot down the road. But who knows? But now, folks, I've got something very, very special to show you. So stay tuned, folks. This is my newest trading system. I want to get this up here to let you folks see it. I think you'll enjoy it. This is all proprietary. You're not going to be able to get this unless you subscribe to the $50,000 trading system that's coming out on Thursday. Only Thursday is it coming out. Oh, I was just told by Sarah that we're all sold out. Folks, somebody sent me this chart, and they asked me to make sense out of it. The only thing that I see on that chart that makes sense to me are those dots that say full moon and new moon. Other than that, all these other oscillators, look at, you got stochastics, you got the MACD, you've got moving averages. My goodness, How can you possibly make any sense out of something like this? I swear to God, I don't. But what am I? It's not my chart. It would belong to somebody else. I'm sure it works great for them. But my goodness, with all that stuff on there, I wouldn't know what to do next. Honest to goodness. As a matter of fact, a funny story. Mark was here doing his book many years ago, and a gentleman was up here from Rio de Janeiro, a big soybean trader, and someone had sent me a chart like this, and I had it in a file, and I said, just like this one, I just wanted to show you what some people are doing, and I happened to hit the wrong button, and this chart popped up, and the guy said, wow. He said, what's that? And Mark was walking by getting some coffee, and he said, that's Larry's $35,000 trading system. And the guy said, swear to God, I'll take it. I mean, it took me a whole day to try to make one up. Honestly, it was really amazing, though. You don't have to be that complicated, folks. We're just looking at certain simple things and trying to get them to work. That's really the bottom line, and there's not anything more harder to do than that. At least my opinion is. I mean, we'll see. Now let's take a quick look here at the bit, because old Bitcoin is still rocking and rolling, folks. It's taking the old oversold situation and telling us we is going higher. You'll notice here that we are up in this area here, right around the 20,000. We have made new highs than we were in January of 2018. So this is definitely not a tulip bulb mania, that's for sure. So this is still going higher. We'd like to see a pullback to about 15,000. That would be a really nice pullback to take a look at it. There's some very strong support setting there at 15,000 in Bitcoin. So we'll be covering that, a little bit of the cryptocurrencies in the show on Wednesday. We'll be going over some of the ones that we've been watching for quite some time. We recommended ADA, way back about 5 months ago. That's tripled in price. And I still think that's going to be a good one down the road, so we'll be able to see what's happening. Hopefully, we're going to have our guests. We're going to have a couple surprise guests come on for us. Well, it's not a surprise. We'll have Jim Twentyman, and then Tom Hugard. Trader Tom was going to stop in and share some information with it. But the whole goal is to, make the money that you have to pay up, $295. We're going to do that, folks. We've done 2 of these before, and we had a big day. The first time it was around 2,000. The second time we did it, we were only up about 500, but we missed a gold trade that was $4,000 by 50 cents, and that was a little bit concerning, but that's the nature of trading. But we did miss that. But I'm almost, I'm not right. Well, I just think it's going to be a lot of fun. I'm going to share a couple of really interesting things about why artificial intelligence works and how you can use it yourself just by doing a couple simple little things that I've not shown anybody how to do before. And the other thing is some interesting statistics on the opening price that is very, very important that I'm going to be sharing that I have not shown before, nor in the books or in lectures or papers or anything like that. They are different, and that also will be interesting. But the main thing is we're going to make some money, and that's the whole thing. We got it for 5 hours. From 9 to 2, so we'll have a lot of fun, and it's enjoyable for me because that's what I like doing. I like to do a couple of these a year. This will be my last one until late spring, so if you get a chance to do it, I think you'll enjoy it. And I know I will, and I think you will. We'll make some money at it, too. The whole thing is to make a couple of bucks off of it so you don't have to pay anything out of your pocket. That's the main thing to be looking at when you're doing this. Now, we've got a really big pattern and something that's really significant, folks. We'll get this up here. Let me hold on here 1 second. If you take a look here, this is the SMH, was a semiconductor. Now, you'll notice the 3 drive to a top pattern. You can see that the symmetry is nearly perfect. In other words, from drive 1 to drive 2 is exactly equal between drive 2 and drive 3. That came in Friday. So this should be topping up in this area right here. You've got a double ABCD pattern up in there. You've got a 3 drive to a top pattern, and this has been the leader of the market So if the leader starts to give up, maybe some of the soldiers will start to fall by the wayside. And this will just be a correction, folks. I don't think this is going to be the major top. The major top might come in a little later, and it might be a major top. Who knows? It doesn't make any difference. It's not about how much money you're going to make on these things. It's how much money you have to risk, and that's where the focus has to be. And that's what you have to do. And that's what we're going to do on the show on Wednesday, and that is to show you how to quantify your risk on all these things. Put the odds in your favor, and after you put the trade on, what do you do after you put the trade on? That's going to be very important. And I'd like to show you some of the things that I look at during the day. We're going to talk about the mental part of this, which is very, very important, because if you can do this right, it offers one thing that very few other professions offer you, and that is freedom, folks, because you can see here, you can trade at home anywhere you want, off your airplane or your motorcycle, whatever you're in. I won't say boat, because who would want to be on a boat? But the main thing is that you can do it yourself if you learn how to do it. But trading is simple, but it's not easy, and you've got to do certain things correctly, and that's what we're really going to try to focus on. I can't do this each day when I'm doing this show because I'm trying to cover too many markets at one time, but during a 5-hour period, I'm able to answer questions, and you can ask the questions of what I'm looking at and how I got to where I am. I'm going to go through, how I made the money back in 1974 during the Russian grain robbery, because I think there's going to be another grain robbery coming up here sometime in 2021. Folks, I went to buy a steak on Saturday, my usual tri-tip. It was a little over 250% higher than it was 3 months ago. 877-927-6648. We'll be right back.
Larry Pesavento watches the markets 24/7, and now is a great time to try out his daily trading service, Fibonacci 24/7. Larry publishes videos and charts for subscribers throughout the week when warranted, and every weekend he puts out a thorough report covering worldwide markets, futures, commodities, and currencies with Fibonacci retracement levels, possible trading setups and zones, and stops and targets for all recommendations included. Larry applies the principles he's developed over decades of trading while analyzing a variety of markets for subscribers. To see for yourself the types of videos, charts, and analysis that Larry provides for his subscribers, sign up for Fibonacci 24/7 today by visiting the front page of TFNN.com under the newsletter tab. You'll also gain instant access to Larry's archived subscriber webinar from earlier this year. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Sign up today. If you're a trader in the market looking to find the path that leads to maximizing profits while decreasing risk, then now is a great time to try out Dave White's daily trading service, The Path of Least Resistance. Through the use of options and equity trades, Dave advises his subscribers on a daily basis of the current market conditions and what possible trade setups are on the horizon. The Path of Least Resistance is published every trading morning, often with updates intraday when initiating trades or closing out positions. Dave White has advised his clients of some outstanding winning options and equity trades in recent months, and now is a great time to try it out for yourself. New subscribers to the Path of Least Resistance receive a 30-day money-back guarantee. See for yourself the types of options and equity trades that are available by signing up for the Path of Least Resistance today by visiting the front page of TFNN.com and selecting the newsletter tab. Sign up today. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that we'll even even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and I want to take a quick look here at the gold market where we were just the other day. We're out here on the 7th of December now, but I wanted to just sort of update it. We'll just get this up here. We'll be able to see this. You'll be able to see here that we did make that 382 retracement up there at the 1848. The high was 1851. We did back off to 1825 last night. That wasn't even a 382 retracement. It was only $27 down from the high. And so what we're waiting for is that we're going to be able to see if we get a nice ABCD pattern in that area over the next few days. Right now, we're sitting right back at the 382 level here at 1845 in the gold. If we clear 1855, that's telling us we're probably going to go higher in the gold. But right now, I still believe that we have a negative implications here in the gold. We'll have to wait and see how the trading gods unfold it for us. But that's what we're watching here this morning, is to see if that gold will pull down to about 1810. That's the key level. And if you remember on long term, that was our long-term target to the downside, was 1810 to 1726, and we hit right in the middle of that at the 1767 level, which I think is a very important bottom. And so we're certainly watching to see how the backing and filling comes up here today, to see how it overlays and gives us a good pattern to possibly get in and go to the long side. But right now we're basically fat. They only put fat. Ooh, that was hit a little close to home. The only thing that we have right now is we've been short the euro. Stop it, Larry. We've been short the British pound, mainly because of that Brexit chart that we posted longer term. That was a big 382 on the weekly. It also was a nice pattern on the upside on the daily. Stopped it right at that 135. The high was 135.40. We dropped 300 handles, and now we're going to see, because someone on the news, and you can't believe these folks because they're like everybody else, they said there's a possibility if this Brexit deal doesn't go in that the pound could go back to where it was in 1985, and that was at 105. And that's a long way from 135 to 105. But remember, in Brexit, we went from 150 down to 118. So these markets, when they move, especially in these currencies, you can't stand in the way. There's no question about it. Just a perfect example of that is, we've had a strong move in the euro here. Let's get this up here so you'll be able to see this. But overnight in the euro, we dropped well over 100 pips, and it stopped right at the 382 of our December 1st low. So that was a perfect retracement, and we rallied about 80 pips, right off of that. So that's telling you that the euro is still acting relatively strong. The pound is totally different. These currencies they act differently on all of these. So pay close attention to them as you're seeing these unfold, because it's very, very important to see that. I had one other chart that factoid that Rich sent us that I wanted to cover here. This is one on the sentiment index. And as you can see here, over the past 18 months, we're as stretched out as we've been in a very, very long time as far as the sentiment indicator. And that means that the bullishness or the fear factor is very, very low, and the greed factor is very, very high. These are the things that, when they add them all together, those are the things that could possibly turn the market. What we're doing is watching a pattern to see if it's going to, unfold like this. We did hit 37 in the E-mini S&P, as Tommy said on his show. That was up 500 points, folks. From where we were, way back in October, from 3,200 to 3,700. So that's been one heck of a move in the face of some of the most negative news, not just the political stuff. I mean, the stuff that's going on with the shutdowns, the lockdowns, and the the restaurants and all this stuff. I mean, it's really quite scary. Here in Tucson, we're a little bit isolated from some of the, scary stuff that we hear in the news. We have people in the hospital, of course, and yes, we do have people that are dying, but my personal physician, who's a very, very popular one here in town, he's got a huge practice. And, he has lost 3 times as many people from suicide as he had from COVID. And, that's the thing. And a couple of his, some of these COVID deaths that, that they have there, they're not really just COVID. There are other things, extenuating circumstances from old people or things that are underlying problems that the people have that keep them from doing that. By the way, if you have any questions, folks, it's 877-927-6648. If you want to know that, we'll be able to see if that's going to be a good thing. Hold on one second here. Okay. Someone said that the screen is not lighting up like it should in the TFNN room. Are the charts posting as normal, folks? I've gotten a couple of complaints here that they're still old charts. Okay, let's keep it. Okay, Gator, I got that, buddy. 10-4. We'll keep an eye on that. Okay, charts are coming through. Okay, so hopefully you'll check your computer. Maybe it's just not updating the way that you'd like. All right, I wanted to. I've covered the semiconductor. I've covered the thing about the margin. By the way, let's just go over those rules that I have in here because they are, I think they're worth a lot because this is what this business is all about. The first thing is a little banner up there that was the work of John Hill, and that is he who knows not what he risks all, because you got to know how much you're risking when you go in, folks. That's the key. It's not how much you can make, it's how much you have to risk. Number 1, never add to a losing position. Absolutely 100% of the time. If you do that, just, stop trading, send your checks directly into the Chicago Mercantile Exchange, because you're never going to make it if you're going to do that. Yeah, you're going to be okay once in a while, but when the man with the sickle and wearing that hoodie comes up behind you one of these days, he's going to say, and now the time has come, so you have faced that final curtain. Number 2, when in doubt, get out and stay out. That's right. You have to have a reason for being in a trade. If you're not, you shouldn't be in it. Plan your trading and stick to it. The little sequence, the little numbers behind that should say, stop watching the monitor. Watching that monitor all day long drives you absolutely crazy, and it doesn't do anything for you. Number 4, take equity out for rainy day periods. And believe me, folks, the rainy day period has come for most people. So try to help as many people as you possibly can over these holidays. TFNN is saying that I'm not Frank Sinatra, but at least I did it my way. Anyway, try to take some equity out for rainy day periods. If you had a good year, share it with some folks that have had a bad year. I mean, there's some really, really tough folks out here that everywhere that have, don't have jobs and don't have food. I mean, it's really quite sad. Never close a trade without a reason. Amos Hofstadter had a little plastic thing on his computer that says, is your reason for the trade changed? And it's B, has it reached the objective? If he could say yes to either of those, he could exit the position. If not, he had to stay in it. We're going to cover the last 4 rules when we get back from the break. 877-927-6648.
Hi folks, this is Tom O'Brien. The printing presses are working 24 hours a day, 7 days a week. The U.S. deficit has risen 200% in 1 year with no end in sight. The markets are looking for an additional stimulus bill to get us through this once-in-a-generation pandemic. There is no free lunch, folks. The more stimulus dollars put into the marketplace, the less your dollar is worth each and every day. This is the time to protect yourself with a portion of your portfolio in the metal market. The Gold Report comes out each Monday morning. I bisect and dissect the dollar, silver, gold, the XAU, and the HUI. The Gold Report is a long-term hedge against the dilution of your buying power. The U.S. has put more than $6 trillion into the marketplace in the last 6 months, with more expected in the next few months. The market did and does need the stimulus, but it will have long-term implications on our buying power. The Gold Report comes with a 30-day money-back guarantee. Go to TFNN.com and order the Gold Report now. Protect your buying power. Order the Gold Report now.
Will the S&P 500 continue to climb? For bold trades on U.S. large-cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
The Bull Bear Trading Hour with Tom and Tommy O'Brien. Next.
Okay, we're back, folks. And folks, you have to love the algorithmic traders over in the NASDAQ. I mean, those guys, they've got a scam going over there. Don't ever stand in front of these things, folks, when they run, because my goodness, they just go nuts. Look what's happened to the NASDAQ here since early this morning. We've run 100 handles, folks. Let's get this up here, and you'll see here that we made a 382 retracement last night, December 7th. Pearl Harbor Day, 382 retracement of the low that we made back on December the 2nd. Look at that, was also the 78% retracement of the low on December the 4th. So that's it. And what we do, we went up and we made a new high here at 12,570. I mean, we're a long way from a new high on the S&P. Well, we're not that far. We're still about 10 handles, but let's keep a close eye on some of these things, because I think it's interesting to see that they're able to do this. And this is algorithmic trading, folks. It's all computer generated. That's how it works. And if you stand in front of that, you carry a risk that can be very, 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 very substantial. Now, someone asked a question about the work that Bill Meridian did that he talked to us last Friday about. You have to respect Bill's work because it's some of the best that's out there. He's always in the top 10 in the trading deal that they have at Timer Digest, and so you have to respect his work. But he's not right all the time. So let's remember that he said that there was a probability that the gold would be making a bottom sometime here in December, and maybe we made that bottom back on December the 2nd. So we'll have to let the trading gods tell us. But if we get above 1870 per ounce in the gold, that would tell us that, yeah, there's a probability that bottom is in, and you want to be able to look at a spot where you could get in and not risk, too much. Now, what we're having happen now wow, Larry, let's try to put the words together without spilling cereal all over your chin. You'll notice here that we're making an ABCD pattern here in the in the Nasdaq right now, as we're talking, I think we hit it. Yeah, just hit 12,585, I believe, was the ABCD structure. That was going back over the last 3 days. That makes that a 3 drive to a top pattern, and whether that's going to mean anything or not, remember, you're in front of all these algorithmic traders that just push the market up, $2,000 in the Nasdaq in a matter of 15 minutes or less. So be very, very careful. You could easily make 12,600. That's that in the newsletter as one of the standard deviations above the mean. So that should be strong resistance up in that area. But again, you're facing these folks that have a computer programs, and they go down just as quickly as they go up. You could see it last night. I mean, it dropped 100 handles just like in a heartbeat. And what does it do here? In a matter of 15 minutes, you rally 80 of those back without even moving, and the S&P hardly does anything because they're different indices and they're based on different things. When you're trading the stock indices, folks, remember that the S&P is the very best one to trade, the highest volume and open interest. Number 2 is the Russell, number 3 is the Nasdaq, and number 4 is the Dow Jones. And mainly the Dow Jones because that's 30 stocks and they are price weighted, they're not cap weighted, so that's a big deal. So you need to know that. Also, so pay very, very close attention to that as you're watching these things unfold. We try to cover those for you, but sometimes we assume that you already know these things, and maybe you do, maybe you don't. We also keep an eye on the open interest and the commitment of traders and stuff. But we really on this big run up, we've not had a huge increase in open interest in the stock indices futures. It's up a little bit, but nothing like what you'd expect it to be, going from 3,200, to 3,700. So those are just a few of the things that we want to, keep a close eye on, because it's, right in the money here of where you want to be, looking at some of these things. Okay. One of the other questions that someone had is to finish the last 5 rules of the stock thing. I'll take a look at natural gas here in just a minute, Ruby. I want to finish these 5 rules here that we haven't quite covered yet. And the number 6 is stops are placed for protection. Use them, because if you don't, you're telling Mother Market that not afraid of her, and boy, you should be. The only true facts in commodity trading are fear and greed. That's the same thing in stock trading, folks. Any trading. The only two things that mean anything are fear and greed. Never allow a substantial profit to become a loss. And you can see what happened to our friend in back east that had a problem with the euro over the night. Instead of having a $500 loss, he ended up having several times that. But that's not going to hurt him, because he's learning, he's new, and that's all part of it. If you don't learn from your mistakes, you're not going to learn anything. So you got to be able to understand when you're wrong and not repeat it. Distribute your risk equally over several markets. If you're trading a big portfolio, that's certainly important. If you're day trading, that's not nearly as important. Then getting back to his problem, which is never hedge a losing position. If you do that, you're holding that stick with the poop on one end, and that means that you got to make 2 decisions instead of 1. And believe me, that's where people make their mistakes, is in a decision-making process. And not only that, but now you're under stress. So he took all that stress away from him today, and I'm sure he's back on his horse, and he's going to do just fine. But don't hedge a losing position. Just get out of the trade, think clearly, and move on to the next trade. It's just like cold calling, folks. You're just one call away from a big sale. So remember that when you're doing this. It's not this trade or next trade. It could be 10 trades out there, but one of those is going to be the big one, and that's the one that you want to try to be on. So that's what it's all about. It's all about risk control and, getting the middle part of this straight. And that's what you've got to do, folks. It's not anything that is too hard to do, but let's pay attention to it, because these are things that I think are, very, very important. That's the way I see it here from the cheap seats here in Tucson, Arizona. Let's check how the markets are doing here for just a second here. We're right in the zone now where we should be topping here in the gold continues to go higher. I thought that was going to stop at about 49, and we're up about 1852 right now. So we'll see. We're back above those highs that we made last week. In other words, we rallied up $25 tonight, $27, folks. So that's a pretty big run here from where we were overnight. So this is a pretty big move that we're having in gold. It shouldn't get much any higher than 1855, but sometimes they don't always listen to me. So let's keep a close eye on that. I can just show you what I'm looking at here quickly because, we're right in a zone here where we should be making some type of a top. But, sometimes they fool you and you're not going to be doing that. So let's take a quick look at this here. Uh-oh, I did something wrong. Just give me a break. Otherwise, there's going to be trouble in River City. Hold on just a second here. And we'll get this up. And Ruby, I will look at natural gas when we come back for the break. I will promise you that. So let's, we just made new highs above last week in the gold. That's a good sign if you're long, and I'm not. I'm just waiting to buy it, so we'll see. Okay, let's take a little break here to pay a few bills. And when we come back, we're going to take a look at Ruby and the Romantics' favorite, natural gas.
Back in the day, I joined Hotel California in 2006, and like many of you, was drawn in by, as well as...
Whatever you think about, you bring about. Whatever you focus on grows.
You see, I believe that everything in life happens for us, not to us. And Tom ignited the fire within me to want to learn how to master the markets. So how did I go from knowing nothing about technical analysis to becoming the #1 market timer for the S&P 500 in 2018 and the #2 market timer in 2019? Simply put, I hired coaches with a proven track record, which led me to a whole new set of tools that I created to interpret the message of buyers and sellers. I would love the opportunity to teach you this award-winning set of tools and help you improve your market timing. You can test drive my newsletter service, Mastering Probabilities, for the next 30 days with no risk to you. Plus, you'll gain access to archived workshops that'll take you step by step through my system. Sign up today by going to the homepage of TFNN.com and selecting Mastering Probability in the newsletter tab.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
With markets trading with extreme volatility and peaks and troughs everywhere, regardless of what you're looking at in the markets, this is a great time to see the type of analysis Basil Chapman delivers for his subscribers every market day with the Opening Call newsletter. Basil has been analyzing markets, providing his take for subscribers to his trading services since 1984. Every morning, Basil publishes an update for his subscribers, along with weekend and evening updates when warranted. The Opening Call provides traders a daily market overview with regard to the direction of the key indices, selective stocks, and commodities, along with specific recommendations, including stops and targets. You also gain instant access to Basil's subscriber webinar archive from earlier this year, a dark cloud cover, and essential market analysis. Ride the Chapman wave today by signing up for the Opening Call newsletter on the front page of TFNN.com under the newsletter tab. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Sign up today.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, Ruby, take a look at that natural gas. If you want to dance, this is where you dance. 239. It's stop 235. You got a 3 drive to a bottom pattern, setting it in the little sweet number of 618. So that should be it. I mean, that's it. I mean, this is the one we posted. So here it is. I mean, this is the price, and everything's coming together right there. So 239's it. If I were doing the trading day to day, we would be buying natural gas right there, not knowing anything about natural gas. Just the fact that it's a 3 drive to a bottom chart. Wait a minute, that natural gas chart's got to be up there. Don't tell me that. It has to be. Whoa, what happened to the natural gas chart? It had to be there. Just a second here. Tell me that. Yeah, there it is. It's up there, 239. Take a look at it. There you go. You got to see it there. It's 239 natural gas. Double check it. Should be there. There we go. Make sure it's there, because that's where you want to be looking at it. That's got everything you could ask for, boys and girls. 3 drive to a bottom. Perfect 61% retracement from the high, sitting right there at 239. You got to risk about $3. But that's what it's looking at. The ES chart is there too, but the natural gas chart is there also. So pay close attention to that. My goodness, what's wrong here? Let me do it again, because this is one that you've got to. This is Mother God and Country, boys and girls. I mean, that's all right. We'll do it one more time. Let's get it up here. Try to get it ready, and then we'll move on to the next thing. But there's the natural gas. It's already jumped $1, but the number was 239. It's at 240. You put a stop at 237. You risk 300. If you're right, you're going to make a few bucks. If you're wrong, you're going to lose 300. That's the bottom line. Quit watching it. We'll check back tomorrow to see what it's doing, and we'll go from there. Okay, that's about it, folks. Hopefully that's all I can cover for today. 877-927-6648. Remember, we got Stan Harley tomorrow on Tuesday. Thursday, Arch Crawford. Friday, Norm Winsky. Wednesday, we'll be doing the live trading, so there's no show that day. We'll be right back tomorrow. May God bless.